Welcome back. Good Wednesday morning, everybody. Thanks so much for joining us this morning. I'm Maria Bartiromo, and I hope you're having a good morning. It is Wednesday, September 24th. It is just before 8 a.m. on the East Coast. President Trump delivering a fiery speech yesterday at the 80th United Nations General Assembly. He called out world leaders right to their faces over their failures within their own countries. He touted America's success, and he told you the impact of wide open borders. Watch.
We are rapidly reversing the economic calamity we inherited from the previous administration. Energy costs are down, gasoline prices are down, grocery prices are down, mortgage rates are down, and inflation has been defeated. The only thing that's up is the stock market, which just hit a record high. Growth is surging, manufacturing is booming. Workers' wages are rising at the fastest pace in more than 60 years. In my first term, I built the greatest economy in the history of the world, but this time it's actually much bigger and even better.
President Trump, meanwhile, canceled his planned meetings with Democrats Chuck Schumer and Hakeem Jeffries. They were supposed to meet on Thursday, but he's calling their demands to avert a government shutdown unserious and ridiculous. He left the door open for future negotiations, however. Meanwhile, the Treasury and the IRS outlining this week which workers could qualify for the no tax on tips deduction in President Trump's big, beautiful bill. Joining me now to talk all about that is the U.S. Treasury Secretary of this great nation, Scott Bessent. Mr. Secretary, it's great to see you.
Maria, always good to be with you.
Thank you so much for joining us. You have so much on your plate. And first, I want to thank you for all that you're doing, Secretary. Thank you.
Well, Maria, it's all the president. It's easy to follow his lead, and it's so exciting to implement the policies the American people elected him for.
I bet.
The American people elected him for change, and he is doing it every day. Can you believe it's just been 8 or 9 months,
No.
the amount that he's gotten done?
No, I cannot believe it's only 8 months. Tell me about that speech yesterday at the UN. What was your biggest takeaway of President Trump calling out others on that stage?
Well, President Trump, as you know, Maria, is all about solutions. Why have we accepted that things don't work? He asked, like, why is the federal government not delivering for people? Why are our cities unsafe? So he came to New York, and he has great respect for the United Nations, but he called them out for it not working. The president has done 7 peace deals, and the UN never got in contact with him. How does that work? He called out the rest of the world and our allies for their failures, whether it was on immigration, on energy, on their economies, and he excoriated them. But then he said, "This is American leadership. Come with us if you want to. We will lead."
Yeah.
And Maria, this is what American leadership looks like, and I think people missed it for 4 years, whether in the U.S. or on the world stage, and the U.S. is back.
A lot of common sense there on policy. All right, so Jay Powell yesterday signaled that the Federal Reserve is going to move slowly on interest rates. He also said the stock market was high. I don't know why he said that and why he would wade into that territory. But what is your thought about the macro story right now? I want to get your take on where we are with regard to economic growth and what's ahead.
Clearly, the Federal Reserve has been too high for too long, and we're going into an easing cycle here. And I'm not sure why Chair Powell has backed up a bit here, because as we can see, we inherited a mess, and it's unclear now. We've had almost 2 million downward revisions in the jobs numbers. There was almost no private job creation in the Biden administration, and with these revisions, we know that something was wrong beneath the hood, and now we could see, in terms of the housing market, that affects consumers, working Americans. Rates are too restrictive. They need to come down. And I think we will go into a cycle. And I'm a bit surprised that the chair hasn't signaled that we have a destination before the end of the year of at least 100 to 150 basis points. And I will add, President Trump's pick for the Federal Reserve Board, Stephen Myron, Stephen has said more in a week more in a week than the Biden administration appointees have said during their entire tenure.
Yeah.
And
well, he wanted a 50 basis point cut. You know, Jay Powell cut 25 basis points. Stephen Bannon wanted 50.
Well, these meetings are supposed to be a discussion. You're supposed to go into them with an open mind. And, you know, I think, you know, not unlike the UN, we've seen a lot of mistakes, a lot of rigidities. And, you know, it's good to get some new blood in there.
Who would be your best pick for chairman of the Fed at this point?
Maria, I'm interviewing 11 candidates. We've got a couple who have surprised me in the strength of their candidacy during the interviews.
Okay.
And
who surprised you?
I'm sorry. I'm not going to talk specifics.
So you don't want to break that news right now?
Maria, if I could, I would, because you're my favorite. But I'm going to be interviewing more candidates this week. We respected the Fed's quiet period, and we didn't interview any sitting Federal Reserve board members or presidents. So there's going to be a lot of interviews next week. I think the first round will be done for first week of October. Then we'll start another round, and I look forward to being able to discuss it with President Trump, present him with 3 or 4 very strong candidates.
Do you think, given what we've seen in the labor market for the last 3 months, you know, we've seen this weakening in the last 3 months. I don't know if you believe the numbers or not at this point, but do you think that tiptoes into recession at some point?
I am less concerned about a recession. I'm concerned about the distributional aspects that we've got going here. You know, I'm concerned that working Americans are getting hit harder just because of the high rates. I'm concerned that a lot of the housing affordability crisis is on the mortgage side. So, you know, I am very concerned, and I believe that we do need rate relief. We need to get at least back to neutral.
Isn't it odd that when you talk about lower rates and the Fed expected to cut another time, at least once more, that rates go up? I mean, do you think it's a certainty that as the Fed lowers rates that you're actually going to see a real impact on, for example, mortgage rates?
I do believe that we are seeing we'll see a substantial drop in inflation. I think that the housing numbers are done through imputed rent, that we're going to see, they run on about a 6-month lag. Everything that President Trump is doing in terms of deregulation, which I think is the underrated, the third leg of his economic policies, that's all disinflationary, and we'll see what happens with this AI boom. Back when the railroads came in, we had this wonderful inflationary growth. At the end of the century, we had the same thing in the 1990s, and everyone asked me, what am I looking for when I interview potential Federal Reserve chairs? And it's just someone with an open mind, who's not looking in the rearview mirror, who's looking forward, who thinks maybe this could be like the 90s, where we saw the office electronics came in, we saw the internet boom. So could the AI boom be like that? Could we have a disinflationary period? Is our star, if it exists, going to move up or down? What's Nehru? So I want somebody who's looking forward, not backward.
I mean, it's such an interesting scenario to look at AI, because on the one hand, you know that AI is going to replace some jobs, right? I mean, obviously. But on the other hand, we didn't know we needed coders 20 years ago. We didn't know we needed all these engineers. So other jobs, even in energy, will be created. But do you have a plan for those jobs that will go away as a result of artificial intelligence?
Maria, we don't. We're working on it now. We actually have what I call an AI czar at Treasury, and she is developing a plan, a roadmap that can help us with the U.S. economy. I'll be talking about that in speeches this fall. And we don't know which way it's going to go. And again, I think we got to have an open mind. But one of the things, as you know better than anyone, President Trump's trying to bring back precision manufacturing jobs to the U.S., this blue collar boom that we're going to see. And those jobs aren't going to be taken by AI.
Yeah, I love what President Trump is doing with the supply chains. It is so important. And I understand this is national security. We're all wondering if there's sort of an outlier out there that is going to turn things around. And I want to get your take on Argentina, because, Mr. Secretary, Argentina's peso sliding, politics and capital outflows rattling investors there. Javier Milei, I guess, has lost the confidence of investors. They're pulling their money out of Argentina. They're fearful that he will scrap his defense of the peso. You say all options are on the table, from swap lines to direct currency support. What's the plan in terms of supporting Argentina? Is there one?
The plan is, as long as President Milei continues with his strong economic policies to help him, to bridge him to the election, I call this the screens moving to the streets. We are not going to let a disequilibrium in the market cause his a backup in his substantial economic reforms. I don't think the market has lost confidence in him. I think the market is looking in the rearview mirror and is looking at decades, if not a century, of terrible Argentinian mismanagement. And people are concerned. People are skittish. It's very hard to believe that it is different this time. But I believe with President Milei, it is. It is.
The president is also pledging strong backing. He's calling for Javier Milei's reforms critical for that stability that you're talking about. But Senator Warren, Elizabeth Warren, says that this is a taxpayer-funded bailout and is more about politics than U.S. interests. What do you want to say to Elizabeth Warren here?
Well, I tweeted it out yesterday. Senator Warren and her protege, Mr. Mondami, who's running for mayor of New York, they are American Peronists. They want to do to the U.S. economy what the Perones, the General Anavita, did to the U.S. They want to take control. So, and I guarantee you, and there are not a lot of things in life that are sure, that New York City will be coming to the federal government for a bailout if the Mondami plans are implemented.
And are you going to give him that bailout?
It will be the same thing that Gerald Ford said. Drop dead.
Drop dead. But look, oh my God. I mean, when you're talking about this mayoral race, this is the capital of, the capital of capitalism, right? I mean, New York's mayor race matters, right, for the country.
It does, but you can't enact policies like this and expect to be bailed out.
Yeah.
I lived here in the 80s. David Dinkins was a very nice man, but I remember rejoicing the night Rudy Giuliani was elected, and the city went on this great path that we all took for granted. We all took for granted. Giuliani to Bloomberg, and then Bill de Blasio came in, terrible leadership. Things sort of went sideways under Eric Adams, and this lurched down under Mondami. Everyone who stayed, now wants to leave.
Yeah.
All the high earners, all the businesses. Maria, if we go back over the past 5 years, we have seen the greatest transfer of wealth in U.S. history from Manhattan County to Palm Beach County. Palm Beach County. Yep. Mondami could be the greatest thing for Florida real estate.
Unbelievable. Do you think we're going to see a government shutdown next week? I mean, you've got this that is on your plate as well. I'm sure you've been talking to lawmakers about funding this government.
Maria, I don't know. What I can tell you is that the Democratic proposals are unserious, that they, this $1.5 trillion, they blew out the deficit when they were in charge. We're not going to let them do it this time. Senator Schumer did the right thing in the spring, compromise, brought Democratic senators along, kept the government open. But, again, you've seen Senator Schumer's poll numbers. He's got AOC nipping at his heels.
Yeah.
He talks about Social Security a lot. I think it's because he's afraid he's going to be out of the Senate and have to draw it down.
Well, I mean, look, you're talking about expiring Obamacare, Affordable Care Act subsidies, I guess for 22 million Americans. And what we learned this week was that they also want those subsidies for illegals, right, in this country. Is that what they want in this package before agreeing to fund the government?
Well, Maria, let's go back to President Trump's speech at the UN yesterday, and it really parallels what the Democrats have tried to do to America. He talked about how countries have open borders. That's what the Democrats tried to do to us. He talked about this emphasis on renewables and how we got behind the curve on energy security and energy dominance. That's what the Democrats want to do to America. We talk about the sky-high debt. That's what the Democrats did to America. President Trump's not going to let him do it, and I have great confidence in him, Speaker Johnson, Leader Thune.
Yeah.
And we will get to the other side of this, but the Democrats don't understand. President Trump was elected for change to right the ship, and we're not going to let them bring down the ship.
Well, they still don't like what's in the big, beautiful bill. And you worked so hard on that. And I know for a while you were saying President Trump is doing tax deals, peace deals, and what tax deals, peace deals.
And trade deals.
And trade deals, thank you,
Yes.
because I thought that was so spot on. And I've been using that as well. In terms of the big, beautiful bill, the no tax on tips element, how do we know which tips are not taxed? Do you want to tell us who's eligible for no tax on tips?
Well, Maria, it's a big list. I'm also the IRS commissioner now, so you can go to the IRS website. We are outlining that, and what we're not going to do is let people game the system. We have records of who's gotten substantial tip income.
Yeah.
And again, this is the strongest point of the bill, because on one side, it gave full depreciation to businesses, so it's spurring a CapEx boom. On the other side, it was President Trump's unique blend of economics for working Americans: no tax on tips, no tax on Social Security, no tax on overtime, and interest deductibility if you buy an American car. And I think what's going to be very interesting here is most Americans have not changed their withholding for 2025. So they'll be getting substantial refunds in 2026. They'll change their withholding in January, and they will get an automatic take-home pay increase. So
that is a big deal.
I think 2026 could be a great year for working Americans.
That is a big deal. Do you want to see a second reconciliation package, and would you propose a cut in capital gains taxes in it?
We'll see. I'm not going to get in front of the president here, but I think all options are on the table. Right now at Treasury, we were tasked with, along with the White House, along with the Senate and the House, getting the bill across the line. That was pass-fail. No one believed it could be done by July 4th. President Trump's leadership, with assistance from Speaker Johnson, Leader Thune, unbelievable. It was done on July 4th. At Treasury, we're in charge of implementation. So we're just worried about implementing this one in a fast, reliable, and safe way for the American people.
Mr. Secretary, a lot of viewers want to hear about Fannie Mae and Freddie Mac, and you've got big plans here. The last time we were on the show, we discussed the portions of these companies going public. You're going to take, 5% or between 3 and 6% of them public. Everybody's buzzing about this $30 billion IPO, possibly the largest IPO we've seen, more than the Saudi Aramco deal. What can you tell us about the plans here? What do you want to do?
Well, Maria, I can tell you that we are moving forward, but in a very deliberate fashion, and we will have announcements in the coming months. But the IPO is important, but the really important thing here is that we either maintain mortgage spreads or narrow them further to help the American people. So as we are negotiating this sale of a government stake, we want a fair price, a good price for the taxpayer, because this is going to be a lot of money for Treasury. But the most important thing here is that mortgage rates stay benign or even get better for American people, because we're in this housing affordability crisis. We talked about it. I think the Fed lowering rates will bring it down, and we are working on this every day. So but with Fannie and Freddie, our North Star is mortgage rates and then the sale to the public.
Well, I mean, there's a lot of ways to do that, right? The sale to the public. And I'm sure you're looking at different ways in terms of doing this. Every bank wants in on it. Investors think this is going to be, I mean, would this be a good investment for someone who's looking at buying into it? Tell me about these companies.
Look, these are the American dream. They're American home ownership. It is the American government. These are regulated entities that, excuse me, went astray during the financial crisis. They were mismanaged, and we are going to make sure that they have proper governance. And when we bring them public, I don't want to talk about perspective, but I can tell you everything will be in place for their success. I think that they are unique as financial institutions. I think that they are unique as consumer institutions. And we are looking for a range of institutional investors who will be long-term holders, but we also want the American people and small shareholders to have a stake in these companies too. We want them to be part of the American dream.
The idea of government owning portions of public companies, this is something that free market people have to get their heads around. They're not clear about your agenda. So walk us through what you're thinking. The government took a 10% stake in Intel. The government is talking about taking a stake in a minerals company. The government will own, obviously, conservatorship with these companies, even if they sell 5% of it. What should we think about that? Because some people say, well, look, if government owns a portion of a company, then that's going to mean that that company gets better treatment than another company. For example, I spoke with the CEO of Figure, who's also a mortgage originator. Here's what he said. Watch this. In terms of the market that is available to you right now, the potential market, what would that look like?
One of the big ones that we're going after is first lien mortgage. So we're now competing directly with Fannie Mae and Freddie Mac, using blockchain technology as an advantage. And for certainly loans under $500,000, we're winning in that competition right now.
And Fannie and Freddie are likely going to see their own IPOs once again, right? President Trump expected to take 5% of those companies public. Does that sort of even pony up the competition that much further?
Well, we like competing against them as private enterprises. They get a little bit of an unfair advantage as a government-backed entity, but so it levels the playing field a little bit. But right now we're winning irrespective.
So broadly speaking, is it an unfair advantage when government has a stake in a public company? And you could look at Fannie Mae, you could look at Intel.
Well, Maria, there are decisions that the U.S. government makes that we believe is good for society. We believe home ownership is good. So therefore, the government wants to be involved. And I can tell you, like having come into government for the private sector, that what we have seen here is that there was a breakdown in our supply chains, and whether during COVID, whether it was semiconductors, whether we're seeing it with the Chinese putting export controls on rare earths. So there are some things for national security or that we have made the decision as a society we want to do. But I can tell you, like the Intel stake, it's now been validated that NVIDIA's come in and taken a stake. The biggest company in the world. President Trump again. He looks for solutions. It was like, well, why were we subsidizing Intel? Why shouldn't the American taxpayer have some of the upside?
Yeah, it's very interesting. You're monetizing the balance sheet.
But monetizing the balance sheet, because I can tell you, every day President Trump wants to be the president who creates assets for the American people, not debt. Not debt.
So you'll be investing in more companies if it meets that national security requirement.
Well, again, we realize that across 5, 6, 7 industries, we are so vulnerable, and we've got to do something about that. There's a group of us in the government led by President Trump who believes that when we leave in January 29, that we will have failed if we have not made resilient supply chains for these key industries, and we're not going to fail.
Is China going to go along with all of this? What can you tell us about the rare earth minerals flow from China? Is it going to flow?
It is flowing, and look, we're not without levers on our side. We have plenty of products that they depend on us for, so there is a back and forth. We do not want to decouple from China. We need to de-risk.
And in terms of those rare earth magnets and minerals, they were pushing back. What is the leverage point? Is it airplane parts? What is the leverage point with China?
There's a big group of products, but it could be aircraft engines and aircraft parts. It could be certain chemicals that are used in production of plastics. It could be the ingredients for silicon.
Okay.
And it's a wide range.
Secretary, I want to take a short break and then come back because your portfolio also includes the sanctions, and we've got Russia on the move and China on the move. We'll take a short break and come right back with Treasury Secretary Scott Bessent. Stay with us. Welcome back. The House Oversight Committee investigating American billionaire Neville Roy Singham for potentially funding extremist groups such as groups linked to the CCP, which promote division and unrest in America, including the June riots in Los Angeles. Oversight Committee Chairman James Comer and Florida Congresswoman Anna Paulina Luna wrote a letter to Treasury Secretary Scott Bessent to request a probe into Singham's funding activities and possible failure to register under the Foreign Agents Registration Act. They write this: "It is imperative that we expeditiously halt the continued flow of funds and material support for malign activities conducted at the behest of the CCP." Joining me now is the woman herself, Florida Congresswoman Anna Paulina Luna, a member of the House Oversight and Foreign Affairs Committees. Congresswoman, it was wonderful to see you the other day at the Charlie Kirk Memorial. Thanks very much for being with us this morning.
Very happy to be back, Maria.
So I want to ask you about this letter that you wrote to Secretary Bessent. Tell us specifically what Neville Roy Singham is doing in your view.
Yeah, so he actually has been the #1 funder of these violent riots. Not even just that, but a lot of the political division and discord that you're seeing in this country goes back to Singham. He obviously is a massive ally of the Communist Chinese Party and has actually made his billions directly working with them, only to in turn funnel those efforts into organizations like the Party of Socialism and Liberation. Maria, though, this doesn't just go back to those riots that we saw that were protesting ICE back in January of this year. This actually is a lot more nefarious. He has over, I believe it's 12 different groups that he's funding, one of which actually has ties to the Salt Lake City queer group that was responsible or being looked at for the assassination of Charlie Kirk. And so what we're finding is these organizations specifically that are focusing on issues that are dividing us, whether it's based on race or class, don't necessarily even care about those topics at hand. They're just using it in an effort to sow discord. And as you're seeing with these violent riots, the money's going back to China. He's not a registered foreign agent, and so he needs to be investigated. And I've also forwarded it to the Department of Justice as well.
Well, that's just incredible, because for a long time I have felt that there is this Marxist thread raging through America and that it is coming from the CCP. Is it just to disrupt life in America? I mean, what is the point of funding, and what specifically is he paying for?
Yeah, so it's not just to disrupt. In fact, Neville Singham is an open, self-declared Maoist. He absolutely does not like what this country stands for, and so what these groups are doing, everything from funding, the Democrat Socialists of America, going into funding counter-Israel efforts, counter-America efforts. But what they're attempting to do is, if they can sow enough discord here and back elected officials, especially that support these ideologies that would essentially put the United States as #2 in the global order, it is my opinion and belief that he is working on behalf of the Chinese government to essentially break America. And that's what, unfortunately, some of these groups are doing. You'll see that the left-wing media has largely just been focusing on the clickbait content, but not actually looking at who's funding it. And Singham is #1. I'd say that he's probably #1 big fish that we have in regards to who's responsible for a lot of the divide in this country. And it's going back all the way to the CCP. Now, what's interesting about Singham is he actually lives in China a majority of the year, did not respond to Congress's request to have him to come in. So we did ask Bessent to freeze assets, but also you're seeing that FARA violation. And what I will tell you is the Department of Justice has a very easy layup here. They could actually bring charges against him. At the time, Senator Rubio had actually written, when he was ahead of Senate Intelligence Committee, to Merrick Garland asking him to do this. Merrick Garland never acted, but we have all the evidence and ability to do so. So I'm encouraging both the Attorney General as well as our Treasury Secretary to act now.
So there are assets that he owns in America that could be frozen.
Correct.
Yeah. All right. Well, we're going to talk with the Treasury Secretary this morning, so I will ask him and follow up on your letter about this.
Thank you.
I want to get your take on President Trump canceling his planned meetings with Democrats, Chuck Schumer and Hakeem Jeffries. The president said what they're asking for is unserious and ridiculous demands to prevent a government shutdown next week. Jeffries responded to the president yesterday. Here's what he said. Watch.
Democrats are ready, willing, and able to sit down with anyone at any place at any time. It's clear that Donald Trump and House Republicans and Senate Republicans are running scared, which is why they refuse to even sit down and have a conversation to discuss the Republican government shutdown and the health care crisis that is going to cause people in the United States of America to die.
Well, I think there was enough drama in that. People will die, Congresswoman. The president left the door open for future negotiations, posted on Truth Social to the leaders of the Democrat Party. The ball is in your court. I look forward to meeting with you when you become realistic about the things that our country stands for. Do the right thing. Congressman, where do you think this is going? Will we, in fact, see a shutdown next week?
I don't want to bet against Trump. If it does end up happening, I think the Democrats would own that, and they have a lot that they're struggling with in regards to their messaging. So I don't know that we'll actually see a shutdown. But what I will tell you, Maria, is I heard Hakeem Jeffries on the floor literally say he would never support what the Republicans had put forward in regards to keeping the government open. And so I think that President Trump made the correct decision because they want the clickbait. They want to be able to fundraise off of saying that they're resisting the president, but they're not actually serious about negotiations. And so I'm definitely going to leave President Trump to do what he does best and broker that deal. But it's ridiculous that they want to keep even COVID level spending in this. It shouldn't happen. We can't afford it.
Yeah, I mean, look, this stare down is going to continue until Tuesday, I guess, when government runs out of money. And, let's talk about the policy fight, because they're talking about the expiring Affordable Care Act subsidies. 22 million Americans is $30 billion a year, while the political fight is over the future of the Democrat Party, because they've got their own infighting there. But your colleague, Clyde, Congressman, joined me the other day and really told us exactly what the Democrats want here. Here's what he said. Watch. Andrew Clyde.
I think what he's talking about are the COVID-era subsidies for Obamacare. Not one Republican has ever voted for it. It's a problem. We're not in COVID anymore. So I think this is an issue of what's not in the bill. This is a clean funding or spending freeze, rather, for the next 2 months so that we can get the appropriations process completed.
So do you expect to get the appropriations process completed? And, I always say, and I've been saying, I don't know how it's possible that you could say you want to go back to pre-COVID spending and then all of a sudden say that you want all of these subsidies, Obamacare subsidies, in this, in the funding so that government doesn't shut down.
Yeah, we can't, frankly, Maria, we can't afford to continue the path of reckless spending. And a lot of what these people, just in general, Washington, is they're uncomfortable with going back to pre-pandemic. Well, guess what? We're not in a pandemic anymore. Representative Clyde was correct, though. This is a clean CR. But the appropriators and the cardinals who are ahead of those different areas need to put something on the floor. I'm not really a fan of CRs, and I'm not necessarily a fan of omnibuses. And so I hope that that's not where we're headed. But ultimately, I understand that this administration needs some wiggle room in an effort to bring forward their policies, and so that's why we've been so supportive. But look, what we're dealing right now is with half of the conference, right? The Democrat half that actually wants to be obstructionist rather than provide a plan, and so they're not actually serious about working with the president and negotiating. And so I hope that the president and the speaker stand firm in their positions, and if there is a shutdown, then it's going to be on them.
Ashley Davis, good move that the president canceled the meetings?
Yes, absolutely. There is absolutely no way that they would have negotiated in good faith. They asked for $1 trillion more.
Congresswoman, it's great to see you this morning. Thank you.
Thank you.
All right, Anna Paulina Luna joining us. We'll be right back. Stay with us. House Minority Leader Hakeem Jeffries is demanding an ironclad health care agreement as tensions escalate ahead of a potential government shutdown when the government runs out of money on midnight on Tuesday, September 30th. The White House Budget Office sent a memo to federal agencies on Wednesday night telling them to, quote, prepare layoff plans in the event of a shutdown. The layoffs would target any employees working on programs that are not legally required to continue during any government funding lapse. Joining me now is White House National Economic Council Director Kevin Hassett. Director, great to see you this morning. Thank you so much for being here. And of course, we know that there are only 2 legislative days left for the Senate before this deadline of a shutdown. Are you expecting a shutdown?
I sure hope not. You know, it's been a bipartisan agreement 13 times in a row where Republicans and Democrats get together and just keep the government open while they're negotiating future policy issues. And what these Democrats have done is they've come to President Trump with really an embarrassingly silly offer. I think the only way to understand what's going on is that when Senator Schumer helped us avoid this last time in the spring, then all of a sudden AOC is going to be potentially threatening him for Senate. And so if the only way, I guess, to survive in the Senate if you're leading the Democrats right now is to be kind of as loopy as possible, because their position is really indefensible. It's having a clear continuing resolution has been something that's happened 13 times in a row with bipartisan support, and they're willing to shut the government down. I think because first, they're worried about their left, but second, we have so much positive momentum in the economy right now that they think that they got to change the game because they're losing so bad.
Yeah, I want to ask you about that because we just spoke with Stephen Myron. We've been talking a lot about the Fed's next move, and as you know, Stephen wants to see a 50 basis point cut. Jay Powell says it's a challenging situation, but he's not sure if we're walking into a string of rate cuts. Here's Stephen Myron with me just in the last hour. Watch.
First of all, I think a lot of folks are more concerned about tariffs driving inflation than I am. I have not yet seen evidence that there are tariff-driven increases in inflation. And it's really important for monetary policy to exit the quite restrictive stance that it's in, because the longer it stays in that stance, the greater the risk to the economy that you do get a material downturn in the labor market that you don't need to experience. In the coming 6 months, I'd like to see us get a lot closer to neutral than we are now. My view is that we can get there in a very short series of 50 basis point cuts, readjust monetary policy. And do you feel that there's a feeling against a 50 basis points on the Fed board? Yeah, I mean, very clearly from the outcome of last week's meeting, people don't feel the need to move urgently. And part of that is because they're still very scared of tariff inflation. So this tariff inflation that Jay Powell keeps talking about has yet to materialize. Kevin, how would you assess the macro story today?
Right. Well, the macro story right now is, first of all, that inflation has dropped sharply since President Trump took office. Growth has been very high. We've got industrial production at an all-time high, capital spending up 8% so far this year. Mortgage rates are down in part because of the tariff revenues, down by about 70 basis points. So the typical new home buyer right now is saving $250 a month because of the lower interest rates, because of these policies. And the thing, when we go back and talk about the disappointing Fed policies that the president's talked about, you know, one of the things that I found odd, and Governor Myron has been talking about it, is that economic theorists know that if tariffs have any effect on prices, that it'll be a one-time adjustment, not an increase in inflation. And to have Austin Goolsbee and a lot of the other people that are on the FOMC talking about how inflation is why they're being so restrictive is, you know, contrary to fundamental economic policy, economic theory. And I think that Governor Myron is just pointing that out. And I actually see, watching the Fed people discuss inflation and tariffs over the last few days, that they're moving towards the consensus, which is the economic consensus, that if there were to be a price increase from tariffs, that it would not be inflationary. It would be a one-time movement. And I think that's a good thing if you're optimistic about future rate cuts.
Yeah, and especially you've got to be optimistic about what these policies have done already to inflation. Look at where oil is. Look at where some food prices are. We just spoke with Stephen Myron, who's expecting shelter and rent to start coming down as well. But I want to get your take about how you and your colleagues have been leveraging and monetizing the U.S.'s balance sheet. I spoke with Scott Bessent about it yesterday. The government taking a 10% stake in Intel. The administration now looking at a 10% stake in Lithium Americas. GM holds 38% of the Canadian-based company. Talks underway with a deal expected in the coming days. How do you see this? Is this all about national security, Kevin?
Yes, I mean, for the most part, you could say that every single move in this area has been about national security. So if you look at the Nippon Steel deal, then one of the things that President Trump decided is that we couldn't really win a war if we didn't have any steel, and our steel industry is being, you know, basically put out of business by Chinese dumping. And so we got to do something about that. And so to make sure that the things that defend our national security are there no matter what, then there are a few things, and this is also true for microchips. If we don't have any microchips stops, imagine production for just about everything in the U.S. stops, then that's a real problem for national security. And so it's not a socialist policy. The government is not going in and trying to take over these companies that, the way a socialist would and give them a 5-year plan or anything. We're just making sure that our national security is preserved with a small equity stake.
Yeah, I think it's very important, and I think it's worth noting for sure. It's smart, by the way. National security also revolves around those semiconductor chips, and you've got Alibaba teaming up with NVIDIA on AI robotics. At the same time, Beijing claims it wants to ban certain NVIDIA chips, saying companies like BYD and Huawei should rely on domestic suppliers. Should we believe that, Kevin?
Well, I think that China wants that to be true because what China would like is to give Huawei the monopoly on all chip sales in China so that then they have more money to try to develop better and better chips and compete with NVIDIA. The thing is they're so far behind NVIDIA that, I think the Chinese guys are going to lose the AI battle if they don't get NVIDIA chips completely. I think that we've got them maybe 2 years behind us right now, and if they want to stay 2 years behind us, they're going to have to buy NVIDIA chips.
All right, let me move on to more. Yeah. Let me move on to more urgent issues, and that is Argentina and what you have done with Argentina. Yesterday, I spoke with the Treasury Secretary, Scott Bessent, about it because it feels like markets are certainly losing credibility in Milei's policies there, as well as in the peso. Here's what the Treasury Secretary told me yesterday. Watch. Then I want to get your take on Argentina.
The plan is, as long as President Milei continues with his strong economic policies to help him, to bridge him to the election, I call this the screens moving to the streets. We are not going to let a disequilibrium in the market cause his a backup in his substantial economic reforms. I don't think the market has lost confidence in him. I think the market is looking in the rearview mirror and is looking at decades, if not a century, of terrible Argentinian mismanagement. And people are concerned. People are skittish. It's very hard to believe that it is different this time, but I believe with President Milei, it is.
I wonder your thoughts here, Kevin. This is one of those outlier issues that could spiral out of control and take the U.S. down with it, can it?
No, I think that's not going to happen. And I think in part, Secretary Bessent gave me a phone call on Sunday. We started talking through the Argentine matter. He had absolute clarity about what we need to do and what could possibly be going on. And the bottom line is that, our Council of Economic Advisors, our National Economic Council, our Treasury all have confidence that Milei's policies are moving Argentina in the right direction. We're also cognizant of the fact that in developing markets, sometimes there are kind of assaults, short assaults, on those markets ahead of elections. It's something that's actually been a pattern that you see over and over where people from the far left try to attack governments of the right with panic attacks close to an election. And actually the amount of money it takes to make sure that the shorts don't determine the future of this country, but rather the people who follow fundamentals is something that Scott Bessent has done very careful math about. And so anybody who thinks that they can cause a panic in Argentine markets has to understand that the U.S. is going to be a firm backstop to that. It's not that we're trying to put our finger on the scales of an election. We're trying to just make sure that market manipulators don't influence the election.
So should we have a confidence then that the U.S. will support Argentina?
Yes, the U.S. 100% will support Argentina and, of course, support the will of the voters. But again, there have been times where there are people who do things like they call them naked short attacks and so on, where market turmoil can be created ahead of an election by, people who maybe don't even care so much about the country as much as the short-term profit that they can make from massive panic. So
all right, thank you.
We're not going to let that happen.
Thank you for that. I want to move on to China because U.S. officials in ongoing trade talks there with Chinese counterparts. This TikTok deal moving forward, as reports say that the president will meet with Xi Jinping, but now likely next year. Kevin, what do you want to see from a U.S.-China trade deal?
Well, I think that President Xi and President Trump have a strong and warm relationship. They're talking about a lot of different things, including the fact that China is buying about half of Russia's oil exports and therefore financing the Ukraine war. But the conversations are ongoing. Jameson Greer and Secretary Bessent are talking to their counterparts practically every day. And I feel like compared to a few months ago, we've made an enormous amount of progress, but there's still work to do.
And in terms of work, is it largely the chips being sent to China and the magnets being sent to the United States? Are we going to see refining capabilities in the U.S.? How long will it take to be more self-reliant when it comes to those rare earth minerals and magnets?
Well, President Trump has ordered us to go full speed ahead on that, and basically things are moving forward very quickly. You've seen some public deals, and also there are a lot of things on the table in the trade negotiations with China, and so we care very much about the fact that China has stopped buying our agricultural products and so on, and so we're in a productive negotiation and looking forward to making a lot of progress between now and say Thanksgiving.
Yeah, I mean, are you expecting a big change in terms of USMCA?
I think that's something that it's getting close to the finish line, and so I don't have a lot of comment on that right now.
All right. Well, let me get your take on the issues that you're watching. We're waiting on GDP, of course, to come out, and I know you can't get ahead of these numbers. They'll be out in about 15 minutes' time. But there's a worry about the labor market, as you know, because of these last 3 months. How would you assess jobs right now?
I think the way I think about it, Maria, and this is about a 20-second answer. I hope I have that much time still. The way I think about it is that if you look at the 2023 and 2024, then the household survey, where we asked people, hey, how many jobs do you have, said that we created about 2.5 million jobs. And the payroll survey said we created about 4.5 million jobs. And they should say about the same number. And what happened is, after the big revisions that we've seen, the payroll survey number is more like 2.5 million now. So the household survey was right all along. Now, if you're seeing all the strong data, like the retail sales through the roof that we just saw, and then you think about, well, what's going on in the job market if there's a capital spending boom and a retail sales boom, how could that possibly be? Well, if you say, well, what we learned is the household survey is a more reliable survey right now, then you look at the August number of plus 288,000, then kind of everything makes sense. And so that's what I'm leaning towards right now, thinking that I'm going to have to start watching the household survey more closely, because even on the job creation number, it's a more reliable signal.
I mean, I wonder if you feel that the consumer end of the economy is stronger than, for example, the business side, because you're seeing an enormous amount of outlays and capital expenditures as it relates to AI. And that in and of itself is giving real confidence signals, isn't it?
Yeah, and creating real income for all the people working on that. But I like to, when I'm looking at the retail sales number, I like to look at year-over-year numbers, because that helps you think about what's the current pace of annual GDP growth. And the year-over-year number right now for retail sales is they're up 6%. Now, that's nominal. So if you're thinking about what's real growth, then it's going to be that, whatever you think the inflation is running right now. But let's say, it's 2-something. And so what that means is that we're in a sort of 4% growth range on consumption, and consumption's about 70% of GDP, so that's a very, very strong economy.
So would you expect consumption to stay strong through year end, and are you expecting a strong economic growth number for the second half of the year?
Yeah, I won't talk about forward-looking things just because you're about to get a GDP release, but I'll say there's a capital spending boom and there's a consumption boom, and that's because people have a lot of confidence in the White House's policies being successful, and I think that they should have that confidence, because we showed last time in 2017 that policies like this can be very, very effective at producing high income growth and high economic growth.
And of course, therein lies the question in terms of whether or not that growth leads to ultimately companies passing on price increases. I mean, we haven't seen the inflation because we're looking at these numbers and they're low. But do you think at some point something's got to give, that companies will stop eating the tariffs and, in fact, start passing it on to consumers?
The way I think about it, I don't worry about that at all. And the way I think about it is, last time we had inflation below 2 and really high growth because there was a supply side boom from all of the Trump policies. And so if you have a supply side boom, then you can have growth without runaway inflation. The way to think about it is, suppose that productivity all of a sudden miraculously was 20% higher. Then that would mean the same amount of inputs are producing 20% more stuff. If there's all that extra stuff, then the price of the stuff has to go down. And so that's what it means. What we mean is, when we say that if you have a supply side boom, that it could be growth without inflation, and that's what our expectation is. We think we're going to do it again.
Look, I've got to tell you, I just cannot believe that it took President Trump coming into office for a second time to get people moving their supply chains to America. I mean, he had this broad vision in terms of ensuring that America is not reliant on adversaries like China, and that's what he's playing out. It's all about national security. Why is it that the Congress allowed us to get so vulnerable all of these years?
Right. Well, I think it took a visionary like President Trump to look ahead and see how we can defend our country and defend our workers. You know, there was an academic literature that said that when China entered the WTO, that it caused like pockets of despair throughout the country when factories closed. It led to substance abuse problems and divorce and everything. And so it's clearly the American people have felt the pain of, you know, offshoring American jobs. And so President Trump is right to bring them back here. And I got to tell you that, you know, we talk about the data, the releases and stuff like that, but I meet with CEOs from our top companies here in the White House almost every day, and almost everybody's coming in and saying, hey, you know what, I just want you to know that we're going to open up a new $30 billion plant, you know, in this state or that state. And it's really, really something that I've never seen before, and the policies are working. They're working the way we want.
Very, very powerful stuff. Kevin, it's great to see you this morning. Thanks so much.
Great to see you too, Maria.
All right, Kevin Hassett at the White House.
All right, I just love it when Donald Trump kicks butt. That's the subject of the riff. Today, President Trump had a field day at the UN, as Eric Shawn was suggesting, saying that climate change is the greatest con job, and if they don't get away from the green energy scam, your countries are going to fail. Take a listen to the full thing. Here it comes.
Telling you that if you don't get away from the green energy scam, your country is going to fail. This climate change, it's the greatest con job ever perpetrated on the world.
And he wasn't bashful about asking the NATO countries why they are funding the war against Ukraine, which is also a war against themselves by continuing to buy Russian energy. What's the point of all that? They're no better than China or India, who have been financing Russia all along. And then Mr. Trump promised big tariffs on Russia if they didn't come to the negotiating table, but Europe has to cooperate by lining up behind the U.S. energy tariffs. All right. He also blasted the failed experiment of open borders throughout Europe. Take a listen to this one.
It's time to end the failed experiment of open borders. You have to end it now. See, I can tell you, I'm really good at this stuff. Your countries are going to hell.
And with it all, Mr. Trump still gave a strong America First golden age speech, even though he noted that the UN escalator and teleprompter didn't work. But that didn't stop him. And Mr. Trump had a few words for what he called the unserious and ridiculous demands made by the minority radical left Democrats, to use his wording. He's not going to meet with them concerning a government shutdown unless they get rid of their $1 trillion spending increase for illegal aliens and criminals. In other words, go pound sand. Stop trying to, again, open borders to criminals. Stop trying to allow men to play in women's sports. Stop trying to raise taxes. Now, if the Democrats want to play ball with some common sense, then he'll meet with them. But right now, they're too far out in left field. And it's not as though Mr. Trump doesn't have any leverage. A recent Washington Post poll, listen to this, found Republicans lead Democrats by 7% on the economy, 13% on immigration, and a whopping 22% on crime. Go ahead, Mr. Trump, keep kicking some butt. And that's the riff.
California lawmakers changing their tune on fossil fuels. They hope to keep oil and gas companies in the state.
What?
Yeah, yeah, there's a turnaround, right?
Change of heart. California governor's office, they called Chevron, the oil company Chevron, days before Gavin Newsom signed into law a drill bill that will allow for 2,000 new oil permits a year over 10 years in California. Newsom is working overtime to stabilize the gasoline market after the state spent, well, a quarter century driving it out of business.
I think it's been a tyranny of about 25 years of trying to get the refining business to leave California. They've been putting in regulations and bureaucracy and taxes and programs to push us out of the state. They've accelerated that in recent years with a thing like a margin cap, a windfall profits tax, they called it.
Some of that has been paused, but Chevron is not overly optimistic about California's recent charm offensive. Californians are already paying $4.66 a gallon to fill their gas tanks. Hi, that's almost $1.50 more than the national average. There you go. It could get worse. When Valero and Phillips 66 close their operations in the next few months, California's 13 oil refineries will become 11. Back in 1983, there were 40. Foreign producers have been filling the gap, supplying the state with 3/4 of their oil. So there is hope that this new drill bill will bring California's own Kern County oil to market and bring energy costs down for consumers. Governor Newsom's office says the new law, and I quote, mitigates against future gasoline price spikes by stabilizing the production of in-state petroleum and refinery supply. But look, it's going to take more than one permitting bill and one phone call to reverse 25 years of, you heard Andy Walsh say there, tyranny.
And one governor, too.
Yeah.
What a joke. Well, thank you, Lauren.
You're not optimistic at all.
No, I'm not.
Okay.
I think we should take this. I think we should take the show to Los Angeles and/or San Francisco. Let's go to the heart, the belly of the beast. We should do that.
Welcome back. President Trump renewing his push to end quarterly earnings reports for public companies. The president said that they should be providing financial updates just twice a year instead of 4 times to save money and focus on running their businesses. Critics say fewer reports could lead investors in the dark and reduce market accountability if implemented. U.S. reporting would be more in line with how the U.K. and Europe does things, where 6-month reporting of earnings is common. Joining me now in a Fox Business exclusive is the chairman of the Securities and Exchange Commission, Paul Atkins. Mr. Chairman, great to see you. Thank you so much for joining me.
Thank you, Maria. It's great to see you, too. Thanks for having me.
Before I get your take on this, I want to play this sound from President Trump when he joined me earlier this year as he was talking about short-term versus long-term thinking. Watch this. You said, look, we're going to have a disruption, but we're okay with that. Is that what you meant? The stock market going down was the disruption? What other disruption were you alluding to?
Look, what I have to do is build a strong country. You can't really watch the stock market. If you look at China, they have a 100-year perspective. We have a quarter. We go by quarters.
That's true.
And you can't go by that. You have to do what's right. What we're doing is we're building a tremendous foundation for the future.
So, Mr. Chairman, is this part of that foundation? Do you agree that public companies should report every 6 months instead of every quarter, 3 months?
Well, we'll see, Maria. This is part of a long-running debate, and the president, I think, has made a timely call for us to look at this. And so, as you pointed out, that foreign companies in the United States who are listed here have a semi-annual reporting requirement, and we've only had a quarterly requirement since 1970. Before that, it was semi-annual, and even before that, it was annual. So what we should have, I think, is go out and get comment on this as part of a larger look at regulatory reporting requirements that have built up over the years, and to see in this in the current age whether or not these rules make sense. We want, people have been discussing, short-termism in the marketplace, and even if you look at the 10 Qs and how the market reacts to them, it's really what people are interested in, what analysts are interested in, is the quarterly earning calls or the earning calls from the CEO and CFO. And so whether those are quarterly, semi-annual, I think it depends on the market for the particular company, what industry, what the investor demand is. The investor is actually, king here. And so I think companies, even when the UK went semi-annual in 2014, a lot of larger UK companies continue to report on a quarterly basis. So I think optionality and catering to what the investor wants, I think, is really paramount.
So can you envision a time that it would be up to the company and maybe they would do quarterly calls with their CEO and CFO to give an assessment of business, but not actually report the actual numbers until a 6-month period? Would you envision something like that?
Could be. I mean, again, I think we'll go out and receive solicit comment and receive comments on this. Lots of not-for-profits and other sorts of groups have been looking at this over the years, economists, and so there's a debate going on about how do we get back to more long-term thinking. If you talk to people who run private companies who negotiate with public companies to buy, different businesses from them. I've heard over and over where, it's really good to be negotiating right up to a quarter end because sometimes you can get a really good deal because the company's interested in making its bogey or whatever during that quarter. So investors are interested in those sorts of things. So, perhaps by going to a semi-annual type of cadence for some companies, that would make a lot of sense for all companies. But to have a floor that is suitable. And so the president, I think, is this is, like I said, a timely call for us to look at this sort of thing.
Yeah, I mean, certainly, when you're talking about quarterly numbers, it creates lots of knee-jerk reactions in the stock market. We see huge moves in the stocks. Over the years, we've seen the creation of the quote-unquote whisper number, right? So I wonder if, doing it on a 6-month basis or a 3-month basis actually creates even more speculation about what's going on, or if it, in fact, creates the long-term thinking that you are suggesting. So we'll keep watching that. It's important. So thanks for weighing in on that. I also want to ask you, Mr. Chairman, about the Securities and Exchange Commission and the Commodities Futures Trading Commission working closely, even on crypto, joint roundtable coming up next week. I first raised this idea to you a long time ago when you first joined us, when you first started your term, about consolidation potential of these two agencies. Back in July, there were reports suggesting that the White House was considering you lead the CFTC. Will you be combining these two agencies? And what's your response to that?
No, I have my hands full right now, and we're working hand in glove right now with the CFTC. So harmonization is what I really envision. People have been discussing these issues for a long time, and I think we're at a point now, especially when we look at the changes in the digital asset area, that it's really incumbent on the two agencies to work hand in glove. Just on Monday, we're going to be doing a roundtable, a joint roundtable with the CFTC. We've been looking at other joint issues with respect to the crypto area. So I look forward to continuing to do that with our colleagues over the CFTC. And what we have to really focus on is, over the years, there's been not so much at the commission level, but down, even in the staff level, there's jockeying for position, and we just don't need regulatory turf battles. I say that the field is littered with the bodies of would-be products such as portfolio margining and single stock futures and whatnot that over the years have been torpedoed by the lack of certainty as between what falls within the SEC's realm and what's at the CFTC's realm. So the two of us need to work together. We need to give certainty to the marketplace. It's the American investor and the American economy that will benefit from a joint effort by the two agencies to work hand in glove. And I look forward to continuing that.
Particularly when it comes to the complexity of crypto market structure. And I want to get your take on that, Mr. Chairman, because the Senate Banking Committee has indicated that the committee is going to delay a vote on market structure legislation until the week of October 20th to give Democrats more time to negotiate. Of course, it looks like the Republicans will need the Democrat support to get this over the finish line. What is your expectation for the crypto market structure? What do you want to see play out once that does pass the finish line?
Well, I'm looking forward to Congress acting on this. I think it's important that we have a market structure bill, and we are actually helping. We were helping with the House, and now we're helping with the Senate as far as technical assistance on questions of securities law and that sort of thing, and gaps that we see that need to be filled. So we're going to continue doing that and provide all sorts of assistance. We're also part of the President's Working Group on Financial Markets that came out with a report, here about a month or so ago, and so we're really stand behind that report, and so we want to see this get over the finish line, because the Genius Act, which was enacted by Congress and the President back about a month ago or so, I think was a huge step forward that applied to stable coins, and that's the first time that the United States government and the United States in statutory form, has recognized a digital asset like stablecoins. So I think that was great. And now we need to focus on the market structure aspect so that there is certainty in the marketplace and direction to the SEC and the CFTC to work together. I anticipate joint rulemaking, and so that way we can try to future-proof this sort of these rules and the relationships from some rogue regulator or something in the future. That's our goal.
Wide support for that Genius Act, absolutely. The SEC approving the nation's first multi-crypto ETF as well, letting investors access a basket of cryptocurrencies beyond Bitcoin and Ethereum. Mr. Chairman, how is that fitting into your broader effort to create clearer rules for digital assets?
Well, that's another example of how we can move forward. We can allow generic listing standards, is what that big step was, where there's more certainty. It's not just an ad hoc type of approach, but we're trying to give the marketplace some kind of stable platform upon which they can introduce new products. So that's a great example. We're going to be working on that. We'll be doing rulemaking in the coming months. We're looking for an innovation exemption to try to get that in place by year end. So there's a lot going on, and I'm really very excited about this opportunity to make this industry in America stand on firm ground so that America can lead with innovation as the president's called for.
Yeah, I mean, look, there's so many fresh ideas here, including, by the way, Mr. Chairman, new policy moves expanding retail investor access to private companies, including potential 401k investments in private funds or on Bitcoin as well. The SEC's Investor Advisory Committee urging tougher safeguards for everyday investors, wanting stronger disclosures on valuations, risks, and liquidity, saying access should be based on investor sophistication, not just wealth. Talk to us a bit more about that, Mr. Chairman, because you want to open up access to private companies for ordinary investors and 401k holders, but you also need to walk this balance of ensuring that you've got boundaries in place so that those private investments are actually safe for retail. So how do you think about this?
Well, you're exactly right, Maria. So we'll be working with the Secretary of Labor and her colleagues over at the Department of Labor to address these issues. And it's so important because, why should private investments in private firms be limited to only the wealthiest and to the big pension funds and things like that? Average people need to be diversified, and if you look at the current stock market today, we have we have only half the number of public companies as we had 30 years ago, and it's if you look at the S&P 500, it's rather top heavy with respect to the Magnificent Seven and what industry are they in? IT, basically technology, and we saw what has happened in the past. If the market gets too concentrated. So individual investors need to be diversified, and the private markets have developed so much because there's a lot of capital available in the private markets. And frankly, it's uncool to be a public company, or it has become so. And I want to make IPOs great again. If you look again 30 or so years ago, when I was a young lawyer starting out in New York, companies like Apple and Microsoft, they had to go public to get capital to build their companies and new products. And today it's opposite. Companies can stay private longer, and there have been so many issues in the public markets between litigation and short-termism, what we were talking about before, the weight of the regulatory apparatus on reporting and that sort of thing, compliance, and then finally weaponization of corporate governance. So those issues have made it really have decreased the attractiveness of being a public company. So we aim to make that better again.
Yeah, and that's all. I'll be interested in hearing what Mickey Bowman has to say Thursday when she speaks about regulation and supervision, all part of the same conversation. Real quick before you go, Mr. Chairman, when you say access to private companies, are you referring to like all private companies, or, you know, I mean, would it be crypto or tech or even farmland? I mean, is it a whole host of different ideas that are just private companies?
Well, the key word here is diversification, and so we have to put in guardrails, you know, for retail investors to have exposure to these sorts of investments, because they can be illiquid, the valuations can be off. There are a whole host of things. Where the retail investor fits in the capital stack of a company, and then finally, you know, what the liquidity is of that investment.
Great
so
point.
we have to put guardrails around, have most favored nation status for those sorts of investments. They should be bound by their advisors. Obviously, we'll have fiduciary duty and that sort of thing. So we'll put the protections in to make sure that that we guard against, you know, bad outcomes to the extent that we can. I'm glad you mentioned liquidity, so it allows people to get in and also get out when they want. Mr. Chairman, it's always a great conversation with you. We so appreciate your time, sir. Thank you. It's great. Thank you, Maria. Good to see you. Paul Atkins joining us. We'll be right back. Stay with us.
Great pleasure. Joining us now is Laura Ingraham, the great host of the Ingraham Angle on Fox News. Laura, it is always wonderful to see you. So kicking butt. Let's start kicking butt in the UN, you know? No open borders, no green scan. I don't know. I couldn't see their faces. I wasn't there. Frankly, I wouldn't have any interest in being there. I don't know whether you have any interest in being there. But here he is. I just love it when he tells him, you know, here's the truth. Donald Trump, truth teller, Laura Ingraham. You know, they may not like it, but they got to hear it.
Well, I think, Larry, we've seen American president after American president go before the UN and utter global niceties. You know, the global community is going to come together. The global order is going to be restored, working together for the global good. And they go home and nothing really changes. So it's nice. They go to some, you know, breakout sessions and some meetings. They have some late night dinners, and the American delegation goes home. The UN ambassador goes back to his or her office. And again, it's just the status quo. So Trump decides, I'm going there, and I'm actually going to tell them the way it is. And it's going to be a tough but pragmatic and, yes, forward-looking address about how they can actually save themselves. And look, if it were I'm not even sure I would go to the UN. I think I might just send a written statement and have someone else read it, because I think it's basically past its usefulness. But Trump actually cared enough to go and to give them his view on why things have gone to hell in a handbasket and how they can slowly begin to turn things around. I thought it was refreshing. You know, Kamala Harris was on The View, I think, saying he was laughed at. I don't think so. From what I could gather, the folks there, the other delegations there, looked scared, like terrified, like, oh my gosh, like this guy is reading us the riot act, and you know, some of what he's saying is actually, you know, makes a lot of sense to us. So I don't think there was laughter. There was it was riveted attention on Trump. And again, we're never going to see another person like him as president of the United States. I thought it was terrific, and I think it's long overdue. You know, talk about truth telling. Okay, so between open borders and radical climate change, the Europeans have essentially destroyed their body's politic all across the continent, okay, with very, very few exceptions, including England, okay? I mean, like the conservative Tory party is disintegrating, and they're going over to Nigel Farage's Conservative Party. But even in the other countries, it's the same story. I mean, look at France, for example. France, Macron, the whole government has crumbled, and they've all embodied, I mean, Germany went through, the German economy, the GDP has been falling quarter after quarter, Laura. I follow such things. Oh, this is Angela
Merkel put them on the path of radical climate change and virtually open borders, unlimited immigration. And the voters are furious. I mean, the populist revolution that we've seen here electing Trump is spreading to Europe, even though I don't think most of the European politicians get it. I mean, that's what's going on here. That's why they're probably scared to death of what he said today.
Well, I think, look, they have a different system of government. And most European countries, of course, they have parliamentary systems. So it's much more difficult to make the fundamental change that Trump has really made in the remaking of the Republican Party. So it's difficult there because you get two coalitions that will unite against the Reform Party, as we're seeing in England. It'll happen at the National Front, where they're basically, telling the opposition leader, we're going to put you in jail. You're not allowed to run again. I mean, so all these elite global forces aligned against the true reformers, the true populists. But nevertheless, you're right. AfD in Germany still making huge gains. We see the Swedish mainstream parties becoming much more anti-immigration. Italy obviously has Meloni. Spain has a rising populist movement. So, look, Donald Trump has changed the game, and I think he's trying to tell these people, and he's frank about it. He's saying this is your only way forward. It's either going to be China or Islam. That's it. And it's brutal. It's brutal to hear, but, I mean, who else is going to tell them this except Trump at this point, or maybe Vance?
And here at home, I mean, he gave this long Truth Social post. You probably saw it. He is not going to let the Democrats push him backwards after one big, beautiful bill. He's not going to let them spend another $1 trillion. He's not going to let them reopen the borders. He's not going to let them, reopen the issue of transgenderism and biological men playing in women's basketball and all that's related to that. He's not going to let them do it. He's basically saying, fine, I'm not going to talk to you. He was going to talk to them. He saw their demands. He said, you have no business making these demands. He's not going to do it, and he shouldn't do it. Why should he do it?
Now, they were going to do another, remember Pelosi was pointing her finger at Trump in the conference room, and that was her moment, and they come out to the cameras, and they grandstand, and they send out a fundraiser that night. He's just not going to give it to them because, as we understand it, they wanted to spend upwards of $2 trillion more to be bought off to keep the government open. And we're out of money. We're not doing it. Trump said, basically, go pound sand. Come back when you're serious. Not going to play their game. And he shouldn't. Look at, as you noted, top three issues. Donald Trump is leading the Democrats, Republicans leading the Democrats on immigration, crime, and the economy. That's the whole ball game. And that, again, his way is the only way forward. If we're going to have a country that is independent and strong, and we have a lot of work to do, and we still have a lot of debt, and he knows it's serious. And I got to tell you, Larry, I was with him all day on Sunday. Had the great blessing and privilege to go to the Charlie Kirk memorial service. So I flew out and flew back with him. That, as other people were resting and other people were taking little breaks, and he just does not stop. Maybe he watched football for 5 minutes, but he does not stop. He's working his foreign policy on the economy, on the spending. I mean, he just doesn't stop, and he knows he has a limited time to do what is necessary to right this ship. And man, is he moving on all cylinders. It was impressive to see. And I think the country, after seeing these Kamala Harris interviews, Larry, should be breathing a sigh of relief that woman is not the president of the United States. Do you want to talk about terrifying? Watch her interview last night with Rachel Maddow, if you can suffer through it.
Kamala's calling him a communist dictator. Kamala doesn't even know what that means. I mean, it's just like all this fascist stuff. They don't even know what that means. That has nothing to do with anything. And you know what? You reminded me, I mean, on the miracle of what happened on Sunday, the miracle. Even there, Mr. Trump came out. He had done it before at the Bible Museum, as you know, and he did it again at the Remembrance. He has come out for a religious revival, a God revival, okay? He has come out for that. I think it's the greatest thing in the world. People of faith love this. The Democrats are on the wrong side of that also, Laura.
For none of them to show up. I mean, wouldn't it have been amazing if a few Democrats
Right.
came and spoke and said,
Right.
we didn't agree with everything Charlie said, but my goodness,
Right.
we have to be here to say no to political violence.
Yes.
I mean, really, they're more upset about Jimmy Kimmel getting suspended for 6 days than they are for a man who actually lost his free speech rights forever. Okay? Think about that for a moment. Kimmel mattered, making millions of dollars and losing money for his network, but Charlie Kirk lost his voice forever, and they didn't give a you-know-what.
You're right. I mean, they could have come out and they could have taken part. You're 100% right. Laura Ingraham, you're always right. That's why we love having you on this show. Thank you.
Great to see you, Larry.
I've said my piece, my little rant. Let's bring in Victor Davis Hanson, Hoover Institution Senior Fellow. Victor, it's great to see you. Victor, there's a lot that I want to talk to you about. I want to talk to you about foreign policy. I want to talk to you about tougher on Russia. But I just want to insert this business. You know, it occurred to me at one of the shows this morning. And if you're saying that we can only grow at 1.5% or 1.8%, that's an admission of failure. That means something's got to change. And yet that doesn't happen anymore. And I single out the Fed because they just published their estimates. 1.8%, Victor, for as far as the eye can see. That runs counter to the American experience, except for recent decades. But for our whole history, we did 3 times as good as that, you know? And that means they need to change. And I think that's what has Trump so frustrated about these government agencies, especially the Federal Reserve. Why should we accept second best or third best or fourth best? That's not America.
Yeah, I think Trump's already put a number of initiatives that are in progress, and he thinks that by the time of the midterms are going to bear fruit. For example, Doug Burgum is leasing oil and gas in a rate we've never seen before. They haven't come into production yet, but he's on track to make us not only the present largest gas and oil producer, but the greatest oil producer by a large margin. And then when you look at Trump has invited in supposedly $10 trillion in foreign investment. Then he rounds up all of these guys that used to not like him in Silicon Valley and spent hundreds of millions of dollars to defeat him. And you look at what they have promised, you know, the Ken Andreessens, the Ben Horowitzes, the Mark Zuckerbergs, the Jeff Bezos, they're all investing. And so he's kind of unleashed the floodgates, but we're not really seeing that yet because he just started to do it. And I think it's going to be something like World War II when, you know, 42, 43, we were really starting to gear up, but we weren't really out producing the Axis yet. But by 1945, we had a larger GDP than Germany, Italy, Japan, but also larger than our own allies, the British Empire and the Russians, all put together. And that was, once you start that ball rolling, it's getting up the hill. And I think he's almost at the summit. And then I would expect next year the foreign investment, the energy leases, the deregulation, and the courting of all of these, I don't know what you would call them, the Henry Fords of our age, the Thomas Edisons, the Henry Kaisers, the William Knudsen's. He's telling them, I will protect you from European regulation and censorship, but you just have to do one thing. Make money, don't outsource, keep it here, and you're going to have a whole new environment that you've never had before. And I think they're pretty excited about that.
And
I'm kind of confident.
No, I think it's going to work. I just think he doesn't want a bunch of monetary bureaucrats to stand in his way. He doesn't want any bureaucrats to stand in his way. And he doesn't want any activist judges to stand in his way. You've written about that, so have I, so have others. Notice, you know what I'm saying? Yeah. Don't tell me, it's like he's saying, don't tell me you won't finance all these new incentives that I've created that will open up growth and provide opportunities for the whole country. You know, doesn't matter what color, what religion, what age group, for the entire country. Don't stand in my way. I mean, he's a growth guy, and that's fabulous. We can't live with less than 2% growth. It's like this iron bar holding us down from a bunch of PhD monetary bureaucrats. And they don't know better because their results are terrible.
Yeah, I think his real plan, I think, is he's trying to substitute class, middle class interest for race. And he's basically telling the Latino truck driver, the black carpenter, the white manufacturer guy on the assembly line, I'm going to make you all prosperous and you're going to have more in common with each other based on your shared interest as a powerful middle class, an American productive class, than you do differences because of your superficial appearances. And that's what's really frightened the left, because he got record numbers of Hispanic males and black males. And never any Republican had done that. And it was this idea that we're going to make you all rich in the middle, not rich, but prosperous, and you're going to have a lot of things in common, and your superficial appearance will be rendered irrelevant because we're going to get you the ability to buy cars and houses and good jobs. And I think it's a very nationalist, patriotic message that's inclusive.
You know what it's like sometimes? It seems like, you know, Donald Trump, by the way, he loves to build buildings. He also loves factories. He loves to build factories. It's like he's kind of saying, don't you stop me from building these factories, Federal Reserve Board or whatever else. Don't you stop me. Don't you dare stop me with your high interest rates from building these factories. I should have put that in the riff. He loves buildings. He loves factories. And he wants interest rates to finance it. Anyway, that was just kind of like my little riff and rant. I figured you'd pick up. Now, Victor, this is very dull after my great opening about growth, but we should go to the United Nations, you and I, just for a few moments. Mr. Trump gave them a piece of his mind, how crazy climate change is a con job and how open borders are destroying all these countries. And, of course, he was right. Nobody would tell the truth like that. I mean, it was a fabulous trip. But I want to ask you this. I was surprised, and I want to get your take on foreign policy. He was very aggressive towards Russia. And he said, I guess, two things, Victor. One is he was saying, if Russia flies over Poland or the Baltics or other NATO countries, those countries should knock down those planes or those drones. That's one thing. And that Ukraine should be able to recapture all of their lost territory from the war. Were you surprised? And how do you see it strategically?
I was surprised, but I think he's trying to say, let no one say I didn't give Putin a chance. I bent over backwards. I wasn't his poodle or asset. I was trying to give him a chance to get out of a disaster that he created. But the problem is that Ukraine doesn't have the area, the population, or the GDP, nor do the Europeans, to go back and take all this in a really bloody offensive. They tried that in 2023, and it was a disaster. So what they can do is what they're doing now is very slowly creating defensive lines and bleeding out the Russians. And they're doing a very good job. But if they were to go on the offensive in this war of drones and obstacles, I don't think it would work. And they don't have the manpower to do it. I'd much rather see them, just hold fast and wear out Putin. Let him be the offensive where all the casualties. There's a magic line, Larry, somewhere where there will be a DMZ, and we don't know where that is, but it's somewhere close now where Putin will go back to the oligarchs and the military class and said, I got 100 miles, 50 miles, 80 miles, 110 of additional territory from where I started, and therefore it was worth 1.5 million Russian dead, missing, and captured. And he doesn't think he's there yet. I think he's not there yet because this was a colossal blunder on his part, and there's a lot of people angry about him. So he thinks he's basically telling us, I don't have enough territory yet to justify my mistake, and I'm going to get it. And so I think all Ukraine should do is rally NATO and arm themselves to the teeth and bleed Russia away. It's like World War I. Passchendaele, the Somme, all of these Verdun, all of these offensives never worked until the Americans came in with 2 million people and overwhelmed the Germans, or they started to use tanks. But barring a technological breakthrough or a huge input of NATO manpower, and I don't see any of that happening, I would think that Ukraine would bleed itself white if it tried to have a massive offensive, and Russia would welcome that.
But it'd be nice, don't you think? It would be nice if the Europeans, NATO, stopped buying Russian oil. Mr. Trump wants to tariff Russian oil, to make them pay Russia a high price. But somehow or other, European politics always get in the way. Their dependence on Russian oil, which is odd because their dependence on the con job of climate change, which Trump blasted them for, got them into so much economic trouble in the first place.
Yeah, there's still oil and gas on the European Western continent. There's gas in France. There's still oil in the North Sea. There's still retrievable oil and gas if they'll just go after it. And they can go. They canceled the East Med pipeline. Israel, Cyprus, Greece, they were all ready to bring in natural gas right into southern Europe. And Biden, of course, and the Euros canceled it. But they just need the willpower. And I think Trump is trying to, jawbone them into doing that. But it'll take a while. But you can't feed the enemy is what Trump is saying. And he's right.
Yes, indeed. All right. Well, I think if we grow fast the way Reagan grew fast, that intimidated the Russians and the Soviets and Gorbachev. Maybe that would have some impact also. We're on the right track. Victor Davis Hanson, thanks very much for your time. As always, we appreciate your wisdom.
Thank you.
All right, Lauren, come on in on this. You're watching Yields every day of the week with Stu Varney. You're talking about these issues. Stephen Myron, look, the risks are jobs here. That's why we need to cut. Jay Powell, a little bit more moderate about that. What do you make of the situation we're in? What do you make of Stephen Myron's influence on this whole Fed?
That's a very good question. Does he have influence on the Fed? And he doesn't have much time. Technically, he's up at the end of January, right, to assert and exert whatever influence he does have. But did you hear from Michelle Bowman today? She says policy should de-emphasize inflation, and last week's cut was just the first step to bring the rates back down to neutral. Look, when Stephen Myron came out and said a series of 50-point cuts, I'm reading 4 because he wants to get the rate back to around 2%, that would create a nervousness, a panic in the stock market. But he's saying that's not the case. Yeah. The U.S. needs to compete globally. Lower rates help you to do that. You can bring borrowing costs down for businesses, for consumers, and you could unlock the housing market. I mean, we have an affordability, quote unquote, crisis that needs to be addressed by Democrats and Republicans. If you can get rates down, if you can get people into homes, that all helps. I think this is what Stephen Myron is saying. But Jay Powell is saying the exact opposite. I'm going to be data dependent. I don't care if I'm too late. I'm going to just read the data and react slowly as needed.
Jackie, Lauren said something that has been a feature of this conversation again and again, the risk of the panic. If you make too big of a cut too soon, you could cause the market to panic. Or if you threaten the Fed's independence, you could cause the market to panic. The market has not panicked about any of that stuff. The market panicked about tariffs. It hasn't panicked about anything to do with the Fed since then. And so I sort of feel like is the data of the market on Myron's side here?
I think it is. And actually, many were saying if we got a 50 basis point cut this last time around, the market would panic. I don't think so. They have a microphone and they broadcast to the market what they're thinking when they sit down and have these conversations, but also when they do press conferences, what they're thinking ahead. They give us a little insight into it. I think the market would say the Fed realized that it was wrong, and it's trying to do something to course correct. And I think this market would be just fine with that, as a matter of fact.
Lydia, you brought up Bowman's remarks in the first hour. So you and Lauren reading the same set of notes there. No, it's very
great.
good.
Like
because
mine.
it matters. And let me throw in why I think it matters. You had, in this last meeting, you had an 11-to-1 situation, basically. 11 of the voting members said we're on for a quarter point. Myron's the outlier. So everyone says there's great. The Fed seemed to rally around Jay Powell in this meeting. But you wonder if that's really the case. And with Bowman in her comments today, I would argue you've got a more divided Fed now than you've had in a very long time.
Absolutely, because another set of comments I was looking at were coming from Raphael Bostic, who also spoke today. He interviewed with the Wall Street Journal yesterday, and he's kind of on the other end of the spectrum, suggesting that he only wanted one rate cut for this year. He voted for the 25-point cut in the last meeting. That would suggest that maybe he's looking at the scenario and saying no more rate cuts for the rest of the year, perhaps. So it does seem like Jay Powell maybe is walking down the middle of the road. When you look at the full landscape of the voting members, he's not the most hawkish, he's not the most dovish. But, where he goes from here, you're very right to point out, Lauren, that this has some real implications for the housing market, not just with mortgage rates, but also with the supply constraint. You know, last week we had data on housing starts and building permits. They were surprises to the severe downside, suggesting that we're not anywhere close to literally building our way out of the housing shortage anytime soon. So some relief there, I think, would be appreciated by builders and people in the housing market as well.
If you just look at the American mind, Kevin, I would argue the biggest thing on their mind when it comes to the Fed and interest rates is housing. It feels like everything you want to work for in life is stymied by this market. Is that a big enough issue for the Fed to tilt the scale a little bit to lower rates, even if the inflation problem isn't totally licked?
Here's the problem. The Fed may not be able to fix mortgage rates. They're more priced on 5- and 10-year Treasury. And they didn't budge on the 25 basis point cut because there's other reasons. One of it's deficit. Others are looking at inflation and worried about the print on Friday. And the other problem, you know, is, Lydia made reference to it, the input costs on copper and aluminum and nickel and softwood lumber are all in the 35% tariff right now. So if you talk to a builder, any of the big ones, they're saying, wait a second, can't get permits. The stuff we make houses with is inflated like hell right now until you work out what the real tariff's going to be with the countries that supply it. Canada's one of them, but there's others. And, you know, that's policy. And so, and the Fed says, great, we'll cut another 25 basis point. I don't think the 5-year budges. And so the idea of a 4% mortgage rate or, you know, 3.5%, it's never coming back, ever. So, and remember, America ran on 7% mortgages for 50 years.
Right.
Yeah.
So that's never coming back. And it doesn't matter how much the president jawbones it, the big bond vigilantes, that name's going to come back from the 70s and 80s. They're the ones pricing long-term debt, and they don't like what they see right now.
It's this affordability question, just to move this in the realm of politics a little bit. You know, this is what the left has, one thing they've learned is run on affordability. And they know housing is maybe of all those pieces, the one that's really going to stick with people right now. If the Fed is inert, Lauren, if them cutting rates isn't going to move mortgage rates down, I think that, I would say Republicans are in a little bit of a pickle here, because I do think that they wanted to deliver on lower housing costs, and I don't know that it's happening right now.
Well, maybe they can do some other things. Like, I remember about a decade ago when we were looking for a house, rates were not that high, but prices were.
Yep.
And my dad said, well, you know, when you were born and we bought our house, I paid that 13% interest rate, but houses weren't that expensive. Now, unfortunately, rates are high and homes are very expensive at record prices. So is there a way that the administration can work with the builders, work with the other countries that supply the materials that we need to help them lower the cost of the house? And then you don't have to worry about rates as much. I don't know, but I think something needs to be done because, yes, heading into a midterm election year, both sides are running on affordability. We've got cheaper gas prices, but we don't have people in homes.
You've been on that, Jackie. I mean, I know you're paying attention to the housing affordability issue, and it looks intractable. And I agree with you. Watching the 10-year, watching the 30-year in relation to the rate cut, it didn't move things a lot.
Giving people these low mortgages when interest rates were essentially at zero was an economic experiment. I still go back to that op-ed from Scott Bessent in the Wall Street Journal that says this all kind of started right after the financial crisis. You can't blame it on any one Fed chair per se, even though, you know, Powell hasn't been great. The other two, they did what they thought they had to do to be able to move the economy and America forward. But arguably, mistakes were made. Rates probably should have gone up or crept up a little bit sooner because we stayed at this point. All these people have locked in these loans now. Part of the problem is none of them want to move because if they move, they say, well, where am I going to go? And why would I take a higher mortgage rate? And prices are still high. So that's partially what's locking up the housing market, too, not just the cost of building new homes and putting more supply out there. This is a tricky one. And as the experiment plays out, we're going to see what ends up happening. I'm not necessarily sure anybody's got the crystal ball here.
And Bessent's main point was the Fed's done too much experimenting.
Yeah.
And that's part of why we're in this issue.
What did he call it? Gain of function.
Gain of function Fed. Enough of that. Hey, you're watching U.S. Steel. What's what's going on.
Oh, yeah, absolutely. Well, the White House has announced that it's blocked U.S. Steel's decision to stop processing raw steel at its Illinois plant. The White House saying, quote, the administration did intervene to block U.S. Steel's decision to idle the Granite City Works plant with the threat of the president invoking his golden share authority. This power, remember, was part of the Trump administration's approval of Nippon Steel's buyout of U.S. Steel, allowing the government to oversee key decisions affecting domestic steel production. The move aims to protect American steel manufacturing and national security interests. And I get all of that, but this is an example of when folks say the government shouldn't really be involved in decision-making in private business. It gets hairy. You know, we've talked about the stake in Intel.
Right.
We've talked about how they're sort of in bed a little bit with NVIDIA as well. So here you've got the government making decisions.
That golden share term has come up a lot. You're one of the guys who is, I think, out there talking about it first. What do you think of this decision?
No one had even heard of the golden share until TikTok came to the block. So it's an 11-month-old phenomenon. It's one individual deciding the outcome and the fate of a multi-billion-dollar company. Same thing going on here with Trump. What this tells me, if this is going to be the policy, just my reaction, I'm going to invest in pig iron, which nobody has invested in America for a really long time. That's the input you need to run that plant. I'm going to find it. I'm going to invest in it. You just put me onto a new investment idea because you can't do what Trump wants without pig iron. That's the next problem. All of these decisions, particularly around these industrial manufacturing facilities, they gave up on this 20 years ago. You can't just build a new steel plant. You got to get the inputs. You got to get, same with aluminum. It'll take 20 years to get back what we can't buy now because of tariffs. So a lot of this industrial policy, including this, I think there'll be a lot of negative reaction to this golden share thing. This ain't America. Like, there's no golden share in the S&P 500. If you had a golden share in an S&P 500 company, you'd go to jail if you didn't disclose it. That's a super preference share.
It could be an import from China that you definitely don't want here, the idea of the golden share.
Well,
anytime everyone's interested in pig iron, they're
Do
looking
you
it up
like
right
that?
now.
Well, I like pig iron, but do you like golden share in this situation? I think a lot of people don't.
Yeah, it creates an immense amount of uncertainty when one person can call the shots. I agree with you on that.
All of these Western nations that are recognizing a Palestinian state, the president has been very clear. He disagrees with this decision. He spoke about that in the UK, standing right next to his friend, Prime Minister Starmer. And he feels this does not do anything to release the hostages, which is the primary goal right now in Gaza, does nothing to end this conflict and bring this war to a close. And frankly, he believes it's a reward to Hamas. So he believes these decisions are just more talk and not enough action from some of our friends and allies.
That's White House Press Secretary Caroline Leavitt on the dozens of countries who are now recognizing Palestinian statehood or want to do so. France yesterday becoming the latest U.S. ally to do so during the 80th annual UN General Assembly. Belgium, Monaco, Luxembourg, and Malta joined the UK, Canada, and Australia in making similar declarations. The White House says the recognition of a Palestinian state makes it harder to end the war in Gaza. President Trump will address the UN this morning, and he will discuss the war and post-war governance plans with Arab and Muslim leaders from Saudi Arabia, Qatar, Egypt, Jordan, and Turkey. The president planning sideline meetings at that UNGA. Hamas, meanwhile, drafting a letter to President Trump asking for a 60-day ceasefire in return for the immediate release of half of the hostages left in Gaza. President Trump has repeatedly called for the release of all of the hostages. Joining me now is Fox News senior strategic analyst and chairman of the Institute for the Study of War, General Jack Keane, back with me. General, great to see you. Thank you so much for being here. And I know you just returned from 9 days in Israel, meeting with key military leaders and diplomats there. Tell us what you've learned from your trip. And then I got to get your take on this letter being drafted by Hamas.
Well, I said that one of the things I wanted to point out certainly is the overwhelming support for the United States in Israel, far more than I've ever seen. Israel's always been pro-American, but ever since October the 7th, and certainly since the 12-day war, it's really quite emotional. I mean, Fox News and Fox Business is played continuously there 24/7. And we were recognized as a result of our exposure on your show and other Fox News shows. And they continuously, emotionally, were thanking us for what the United States has done to protect the Israeli people, and the gratitude specifically pointed toward President Trump. So that was just a major takeaway in itself, how grateful they are. I spent a lot of time with the senior leaders. Obviously, I can't discuss the content of those meetings because they are their meetings. But certainly, what we're about here in Gaza is I support 100% the Prime Minister's declaration here to finish the leadership off here. Either they surrender and leave, and he's willing to make certain that they do that and can survive, or he's going to take it away from them physically. And that is the right move. And the pressure he's putting on Gaza is already turning some results. You can see Hamas is moving again towards some kind of negotiated settlement. I think we should hold out to get everybody out. And certainly, what are the conditions that would be imposed on Israel to do that? Israel would want Hamas to walk away and give up the hostages, or they're going to continue to conduct this operation and force Hamas to move away and also try to get those hostages back. Tough situation in front. It's going to take time, Maria.
Well,
in talking to IDF leaders and others, I mean, a minimum of likely 6 months. And we're going to have some patience as this operation unfolds. But major benefits as a result of Israel's domination of Iran and its proxies. I mean, what is happening, we never could have seen. Normalization talks with Lebanon, a security agreement with Syria, which is really taking hold here. Think of that. I mean, that is absolutely a paradigm shift. The other things are recovering Gaza. There's a thought, Israel's done some informal surveys of the Gazan people, and a number of them, the majority of them, would be willing to voluntarily relocate to another country. That in itself is news, and it needs to be explored in terms of what the countries are. The President of the United States likely already is aware of that, and the United States can help in this. That seems to be a vehicle to move the Gazans out of there. If they recover Gaza at some point, it'll take some time to do it.
Yeah.
They want them to come back. That's another matter. But at least it's a step in the right direction. Lots of talks about what to do about Gaza post-Hamas are underway. No definitive decisions, but plenty of ideas and plenty of discussion on that subject.
Well, President Trump has handled this masterfully in terms of uniting allies around his agenda. He's going to be meeting with Arab and Muslim leaders at the UN today. And, you know, there's this conversation about Palestinian statehood. As Hamas drafts this letter to the president asking for a 60-day ceasefire in return for half of the hostages left. I mean, should we be, trusting Hamas that they're going to release half of these hostages if we give a 60-day ceasefire? And what about Palestinian statehood?
Well, what these countries are doing is not only misguided, Maria, it is absolutely downright shameful. I mean, they are giving Hamas payback for what they have done since October the 7th.
Exactly.
They're helping to validate October the 7th. That is absolutely outrageous behavior done, and they're appealing to internal audiences, likely for political reasons, who are pressuring them over what has happened to the Gazan people and the number of casualties they have suffered, which are horrific. And the leaders of Israel would say the same. But right now, I mean, look at the evidence. The Israelis have tried to get all the Gazan people out of Gazan City. About 550,000 have left. Hamas is imprisoning the others, will not let them leave. This is the diabolical nature of Hamas. And what happens as a result of that? Israel gets blamed for it.
That's right.
Let's face the facts and start telling the truth about this operation and what has taken place.
Well, thank you for your
behavior
that's right.
on the part of those countries.
Thank you for your blunt assessment of all of this. I think our audience agrees with you. President Trump is also going to be meeting with Ukrainian President Zelensky at the UN today. He'll hold bilateral talks with senior European officials over Russia's war in Ukraine. And Zelensky is expected to ask the president for more security guarantees following multiple Russian drone incursions into NATO countries. I am this morning speaking with the newly elected president of Poland, and I spoke with Karol Nawrocki yesterday about those drone incursions. 2 of those drones flew right into Poland airspace. Watch this. Poland shot down Russian drones after Russia's airspace violation. How many drones have you witnessed, and what is your reaction to this?
We are talking about 21 drones. We have no doubt that this action had been planned by the Russian Federation. Surely this was not a mistake. Our eastern border is under the migratory pressure, so we are in the midst of a hybrid war. The Baltic Sea, which joins a couple of European countries, is a place where there are regular provocations carried out by the Russian side. Now we witnessed the violation of our airspace. So we can say that this is a regular testing of Poland's defensive capabilities and of the whole of NATO.
My full interview, my exclusive with President Nawrocki is coming at the top of the 8 a.m. hour, General. But you heard what he said there. They are in a hybrid war. What's your take on this new spiking aggression of Russia sending drones into Poland, Romania, Estonia? Your thoughts?
Yeah, it's anything but a hybrid war. I couldn't disagree more with the president there. Listen, they flew several hours, 19 drones into Polish airspace. That is an active war in itself, and they're testing Poland's response to that. And number 2, they're testing their will, and that's what's happened also in Estonia. What do I mean by that? Well, they want Poland to conclude that what they need to do is shore up their defenses better and reduce the resources and support for Ukraine because they're threatening them. Oh. And it's not a hybrid war. These are conventional tactics being used. Russia has the capability to deliver 1,000 drones flying into Ukrainian airspace and into Polish airspace. And it's a fact that Poland would not be able to stop all those drones based on the interceptors that they have and the $1 million interceptors that they are to shoot down a $10,000 drone that has the capability of killing people. Wake up. This is not a hybrid war. This is Russia testing you, and the next step could be quite something significant. And NATO has got to come together and not talk about Article 4, talk about Article 5. And the next step is to shoot them down.
So are you saying
that's where we should be? Wake up, NATO.
This is not just a test for Poland. This is a test of NATO. And you would like to see a response from NATO countries?
Absolutely.
You want to see a response from NATO countries?
I want to see NATO come together, recognize the threat to what it is, and Russia is conducting military escalation inside Ukraine and outside it. It's the forerunner of something more serious. Tell Russia what's the next step.
Yeah.
If you do this again, we're going to start shooting it down. We're going to defend ourselves. We're not going to wring our hands and talk about, well, is this a hybrid war or is this a real war? Yeah. Nonsense.
Great
Look
point.
at what's really happening.
Yep, absolutely. General, thanks very much. House Minority Leader Hakeem Jeffries is demanding an ironclad health care agreement as tensions escalate ahead of a potential government shutdown when the government runs out of money on midnight on Tuesday, September 30th. The White House Budget Office sent a memo to federal agencies on Wednesday night telling them to, quote, prepare layoff plans in the event of a shutdown. The layoffs would target any employees working on programs that are not legally required to continue during any government funding lapse. Joining me now is White House National Economic Council Director Kevin Hassett. Director, great to see you this morning. Thank you so much for being here. And, of course, we know that there are only 2 legislative days left for the Senate before this deadline of a shutdown. Are you expecting a shutdown?
I sure hope not. You know, it's been a bipartisan agreement 13 times in a row where Republicans and Democrats get together and just keep the government open while they're negotiating future policy issues. And what these Democrats have done is they've come to President Trump with really an embarrassingly silly offer. I think the only way to understand what's going on is that when Senator Schumer helped us avoid this last time in the spring, then all of a sudden AOC is going to be potentially threatening him him for Senate. And so if the only way, I guess, to survive in the Senate, if you're leading the Democrats right now, is to be kind of as loopy as possible, because their position is really indefensible. It's having a clear continuing resolution has been something that's happened 13 times in a row with bipartisan support, and they're willing to shut the government down. I think because first, they're worried about their left, but second, we have so much positive momentum in the economy right now that they think that they got to change the game because they're losing so bad.
Yeah, I want to ask you about that because we just spoke with Stephen Myron. We've been talking a lot about the Fed's next move, and as you know, Stephen wants to see a 50 basis point cut. Jay Powell says it's a challenging situation, but he's not sure if we're walking into a string of rate cuts. Here's Stephen Myron with me just in the last hour. Watch.
First of all, I think a lot of folks are more concerned about tariffs driving inflation than I am. I have not yet seen evidence that there are tariff-driven increases in inflation. And it's really important for monetary policy to exit the quite restrictive stance that it's in, because the longer it stays in that stance, the greater the risk to the economy that you do get a material downturn in the labor market that you don't need to experience. In the coming 6 months, I'd like to see us get a lot closer to neutral than we are now. My view is that we can get there in a very short series of 50 basis point cuts, readjust monetary policy.
And do you feel that there's a feeling against a 50 basis points on the Fed board?
Yeah, I mean, very clearly from the outcome of last week's meeting, people don't feel the need to move urgently. And part of that is because they're still very scared of tariff inflation. But
so this tariff inflation that Jay Powell keeps talking about has yet to materialize. Kevin, how would you assess the macro story today?
Right. Well, the macro story right now is, first of all, that inflation has dropped sharply since President Trump took office. Growth has been very high. We've got industrial production at an all-time high, capital spending up 8% so far this year. Mortgage rates are down in part because of the tariff revenues, down by about 70 basis points. So the typical new home buyer right now is saving $250 a month because of the lower interest rates, because of these policies. And the thing, when we go back and talk about the disappointing Fed policies that the president's talked about, you know, one of the things that I found odd, and Governor Myron has been talking about it, is that economic theorists know that if tariffs have any effect on prices, that it'll be a one-time adjustment, not an increase in inflation. And to have Austin Goolsbee and a lot of the other people that are on the FOMC talking about how inflation is why they're being so restrictive is, you know, contrary to fundamental economic policy, economic theory. And I think that Governor Myron is just pointing that out. And I actually see, watching the Fed people discuss inflation and tariffs over the last few days, that they're moving towards the consensus, which is the economic consensus, that if there were to be a price increase from tariffs, that it would not be inflationary. It would be a one-time movement. And I think that's a good thing if you're optimistic about future rate cuts.
Yeah, and especially you've got to be optimistic about what these policies have done already to inflation. Look at where oil is. Look at where some food prices are. We just spoke with Stephen Myron, who's expecting shelter and rent to start coming down as well. But I want to get your take about how you and your colleagues have been leveraging and monetizing the U.S.'s balance sheet. I spoke with Scott Bessent about it yesterday. The government taking a 10% stake in Intel. The administration now looking at a 10% stake in Lithium Americas. GM holds 38% of the Canadian-based company. Talks underway with a deal expected in the coming days. How do you see this? Is this all about national security, Kevin?
Yes, I mean, for the most part, you could say that every single move in this area has been about national security. So if you look at the Nippon Steel deal, then one of the things that President Trump decided is that we couldn't really win a war if we didn't have any steel, and our steel industry is being, you know, basically put out of business by Chinese dumping. And so we got to do something about that. And so to make sure that the things that defend our national security are there no matter what, then there are a few things. So this is also true for microchips. If we don't have any microchips, imagine production for just about everything in the U.S. stops, then that's a real problem for national security. And so it's not a socialist policy. The government is not going in and trying to take over these companies that, you know, the way a socialist would and give them a 5-year plan or anything. We're just making sure that our national security is preserved with a small equity stake.
Yeah, I think it's very important, and I think it's worth noting for sure. It's smart, by the way. National security also revolves around those semiconductor chips, and you've got Alibaba teaming up with NVIDIA on AI robotics. At the same time, Beijing claims it wants to ban certain NVIDIA chips, saying companies like BYD and Huawei should rely on domestic suppliers. Should we believe that, Kevin?
Well, I think that China wants that to be true because what China would like is to give Huawei the monopoly on all chip sales in China so that then they have more money to try to develop better and better chips and compete with NVIDIA. The thing is they're so far behind NVIDIA that, you know, I think the Chinese guys are going to lose the AI battle if they don't get NVIDIA chips completely. I think that we've got them maybe 2 years behind us right now, and if they want to stay 2 years behind us, they're going to have to buy NVIDIA chips.
All right, let me move on to more. Yeah. Let me move on to more urgent issues, and that is Argentina and what you have done with Argentina. Yesterday, I spoke with the Treasury Secretary, Scott Bessent, about it because it feels like markets are certainly losing credibility in Milei's policies there, as well as in the peso. Here's what the Treasury Secretary told me yesterday. Watch. Then I want to get your take on Argentina.
The plan is, as long as President Milei continues with his strong economic policies to help him, to bridge him to the election, you know, I call this the screens moving to the streets. We are not going to let a disequilibrium in the market cause his a backup in his substantial economic reforms. I don't think the market has lost confidence in him. I think the market is looking in the rearview mirror and is looking at decades, if not a century, of terrible Argentinian mismanagement. And people are concerned. People are skittish. It's very hard to believe that it is different this time, but I believe with President Milei, it is.
I wonder your thoughts here, Kevin. This is one of those outlier issues that could spiral out of control and take the U.S. down with it, can it?
No, I think that's not going to happen. And I think in part, you know, Secretary Bessent gave me a phone call on Sunday. We started talking through the Argentine matter. He had absolute clarity about what we need to do and what could possibly be going on. And the bottom line is that, you know, our Council of Economic Advisors, our National Economic Council, our Treasury all have confidence that Milei's policies are moving Argentina in the right direction. We're also cognizant of the fact that in developing markets, sometimes there are kind of assaults, short assaults on those markets ahead of elections. It's something that's actually been a pattern that you see over and over where people from the far left try to attack governments of the right with panic attacks close to an election. And actually the amount of money it takes to make sure that the shorts don't determine the future of this country, but rather the people who follow fundamentals is something that Scott Bessent has done very careful math about. And so anybody who thinks that they can cause a panic in Argentine markets has to understand that the U.S. is going to be a firm backstop to that. It's not that we're trying to put our finger on the scales of an election. We're trying to just make sure that market manipulators don't influence the election.
So should we have a confidence then that the U.S. will support Argentina?
Yes, the U.S. 100% will support Argentina and, of course, support the will of the voters. But again, there have been times where there are people who do things like they call them naked short attacks and so on, where market turmoil can be created ahead of an election by, you know, people who like maybe don't even care so much about the country as much as the short-term profit that they can make from massive panic. So
all right, thank you.
We're not going to let that happen.
Thank you for that. I want to move on to China because U.S. officials in ongoing trade talks there with Chinese counterparts. This TikTok deal moving forward, as reports say that the president will meet with Xi Jinping, but now likely next year. Kevin, what do you want to see from a U.S.-China trade deal?
Well, I think that President Xi and President Trump have a strong and warm relationship. They're talking about a lot of different things, including the fact that China is buying about half of Russia's oil exports and therefore financing the Ukraine war. But the conversations are ongoing. Jameson Greer and Secretary Bessent are talking to their counterparts practically every day. And I feel like compared to a few months ago, we've made an enormous amount of progress, but there's still work to do.
And in terms of work, is it largely the chips being sent to China and the magnets being sent to the United States? Are we going to see refining capabilities in the U.S.? How long will it take to be more self-reliant when it comes to those rare earth minerals and magnets?
Well, President Trump has ordered us to go full speed ahead on that, and basically things are moving forward very quickly. You've seen some public deals, and also there are a lot of things on the table in the trade negotiations with China, and so we care very much about the fact that China has stopped buying our agricultural products and so on, and so we're in a productive negotiation and looking forward to making a lot of progress between now and say Thanksgiving.
Yeah, I mean, are you expecting a big change in terms of USMCA?
I think that's something that it's getting close to the finish line, and so I don't have a lot of comment on that right now.
All right. Well, let me get your take on the issues that you're watching. We're waiting on GDP, of course, to come out, and I know you can't get ahead of these numbers. They'll be out in about 15 minutes' time. But there's a worry about the labor market, as you know, because of these last 3 months. How would you assess jobs right now?
I think the way I think about it, Maria, and this is about a 20-second answer. I hope I have that much time still. The way I think about it is that if you look at the 2023 and 2024, then the household survey, where we asked people, hey, how many jobs do you have, said that we created about 2.5 million jobs. And the payroll survey said we created about 4.5 million jobs. And they should say about the same number. And what happened is, after the big revisions that we've seen, the payroll survey number is more like 2.5 million now. So the household survey was right all along. Now, if you're seeing all the strong data, like the retail sales through the roof that we just saw, and then you think about, well, what's going on in the job market if there's a capital spending boom and a retail sales boom, how could that possibly be? Well, if you say, well, what we learned is the household survey is a more reliable survey right now, then you look at the August number of plus 288,000, then kind of everything makes sense. And so that's what I'm leaning towards right now, thinking that I'm going to have to start watching the household survey more closely, because even in the job creation number, it's a more reliable signal.
I mean, I wonder if you feel that the consumer end of the economy is stronger than, for example, the business side, because you're seeing an enormous amount of outlays and capital expenditures as it relates to AI. And that in and of itself is giving real confidence signals, isn't it?
Yeah, and creating real income for all the people working on that. But I like to, when I'm looking at the retail sales number, I like to look at year-over-year numbers, because that helps you think about what's the current pace of annual GDP growth. And the year-over-year number right now for retail sales is they're up 6%. Now, that's nominal. So if you're thinking about what's real growth, then it's going to be that, whatever you think the inflation is running right now. But let's say, it's 2-something. And so what that means is that we're in a sort of 4% growth range on consumption, and consumption's about 70% of GDP, so that's a very, very strong economy.
So would you expect consumption to stay strong through year end, and are you expecting a strong economic growth number for the second half of the year?
Yeah, I won't talk about forward-looking things just because you're about to get a GDP release, but I'll say there's a capital spending boom and there's a consumption boom, and that's because people have a lot of confidence in the White House's policies being successful, and I think that they should have that confidence, because we showed last time in 2017 that policies like this can be very, very effective at producing high income growth and high economic growth.
And of course, therein lies the question in terms of whether or not that growth leads to ultimately companies passing on price increases. I mean, we haven't seen the inflation because we're looking at these numbers and they're low. But do you think at some point something's got to give, that companies will stop eating the tariffs and, in fact, start passing it on to consumers?
The way I think about it, I don't worry about that at all. And the way I think about it is, last time we had inflation below 2 and really high growth because there was a supply side boom from all of the Trump policies. And so if you have a supply side boom, then you can have growth without runaway inflation. The way to think about it is, suppose that productivity all of a sudden miraculously was 20% higher. Then that would mean the same amount of inputs are producing 20% more stuff. If there's all that extra stuff, then the price of the stuff has to go down. And so that's what it means. What we mean is, when we say that if you have a supply side boom, that it could be growth without inflation. And that's what our expectation is. We think we're going to do it again.
Look, I've got to tell you, I just cannot believe that it took President Trump coming into office for a second time to get people moving their supply chains to America. I mean, he had this broad vision in terms of ensuring that America is not reliant on adversaries like China, and that's what he's playing out. It's all about national security. Why is it that the Congress allowed us to get so vulnerable all of these years?
Right. Well, I think it took a visionary like President Trump to look ahead and see how we can defend our country and defend our workers. You know, there was an academic literature that said that when China entered the WTO, that it caused like pockets of despair throughout the country when factories closed. It led to substance abuse problems and divorce and everything. And so clearly the American people have felt the pain of, you know, offshoring American jobs. And so President Trump is right to bring them back here. And I got to tell you that, you know, we talk about the data, the releases and stuff like that, but I meet with CEOs from our top companies here in the White House almost every day, and almost everybody's coming in and saying, hey, you know what, I just want you to know that we're going to open up a new $30 billion plant, you know, in this state or that state. And it's really, really something that I've never seen before, and the policies are working. They're working the way we want.
Very, very powerful stuff. Kevin, it's great to see you this morning. Thanks so much.
Great to see you too, Maria.
All right, Kevin Hassett at the White House.